Next from the state capitol, Ralph Martire of the Center for Tax and Budget Accountability provides an overview of Illinois' current tax structure and the potential effects of enacting a progressive income tax over the state's current 5% flat income tax. This runs about 14 minutes.
Ralph Martire, thanks for joining us again on the Illinois Channel. And we wanted to get your thoughts on Illinois' current tax structure. There's a lot of different proposals being floated around. And just for the viewer's sake, there's the idea of extending what was called the temporary tax increase, which is currently at 5%. There's an idea by Senator Harmon to make it what he calls the fair tax, which would be a progressive tax as we have at the federal level, where more people, the higher income people, pay more money. You have studied tax policies for quite a number of years. Let's just get your thoughts on where we are and what you think Illinois needs to have vis-a-vis revenue from tax changes.
Well, obviously, if you just picked up a textbook on tax policy and you were going to design an income tax from scratch and you didn't care about ideological or worldview, you just wanted to get it right in a way that would work, you would very much want to do something like they have at the federal level or like Senator Harmon and Representative Mitchell have proposed. You would want to have a fair income tax with lower rates on lower levels of income and higher rates on higher levels of income. And that's tax policy 101. And the reason why that's considered fair in a capitalist economy actually goes all the way back to the great Adam Smith, man that invented capitalism and the wealth of nations. He said taxes ought to be designed to remedy inequality of riches as much as possible by relieving the poor and burdening the rich. That's a direct quote out of the Wealth of Nations. And the reason for that is simple. The way income gets distributed in our economy, both in Illinois and nationally, it very much skews to the top over the bottom and middle. In fact, over the last 30 years, the bottom 90% of income earners have actually, after inflation, lost income. They're earning less today in inflation-adjusted dollars than they did in 1980. In fact, they're earning almost 40% less. Meanwhile, the wealthiest 10% in America and in Illinois, these numbers track both at the state level and the national level, are earning, after inflation, 139% more than they did in 1980. So if you want to tax fairly, you have to respond to that reality and have your rate structure adjust to ability to pay, lower rates at lower levels of income and higher rates at higher levels of income. That said, a lot of people misunderstand how that works. If you're at the highest level, if you're a millionaire, you don't pay that high rate on all your taxable income. You only pay that high rate on your income that's in excess of $1 million. Let's say the highest level is $1 million. So at those lower rates, wherever the lower rate cutoffs are, you pay the lower rate on your lower levels of income. So your effective tax rate, what you really pay, is significantly lower than the top stated marginal rate.
So the top rate under Senator Harmon and Representative Mitchell, do you know that number?
Yeah, under their proposal it would be 6.9%.
6.9%. So just to make it clear for the viewers, they don't pay 6.9% from the first dollar. Going back to it, you pay a lower rate. So like on the first, whatever it is, the first $10,000, you might pay 2%.
Yeah, it's 2.9 in Senator Harmon's proposal, for instance.
And then from 10 to 20 or 30, you pay. It's like going up a ladder, and the higher you go, the higher the rate goes.
Right, and the rate only applies to the increment for which it applies, right? So anything below it has the lower rate. And even on top of that, what people fail to understand, and is really important to understand, is it's not your gross income that's subject to this tax, right? It's your net income after your deductions and after your credits. And so the effective tax rate is always significantly lower than the stated tax rates, or in a fair tax system than the marginal rate that applies to different segments of income along the ladder.
Relative to the what we were just talking about, the progressiveness of the tax and the ladder, what about the flat tax? Does that apply from first dollar, or is that also?
Yeah, see, sadly, that applies from first dollar. And so it's a very unfair way to tax people, because effectively it does not correspond to ability to pay at all. Now that we know that income distribution very much goes to the top over the bottom and middle over time, and the data here are unassailable and very clear, then you really want your tax policy to be able to respond to this economic reality. And in fact, that's why the tax policy textbooks all say the way you build some fairness into a tax system is to have an income tax that has this ability to adjust to your ability to pay. In fact, no other tax can do that. Sales tax, if you're going to go buy the item that's subject to the sales tax, you pay the full tax, irrespective of your income. Property tax, you want to live in a house, you want to rent an apartment, you're paying the property tax. And believe me, renters pay property taxes, landlords sure don't. It's part of their rent. So net, there's only one tax you could even design to correspond to ability to pay, and that's the income tax. And Illinois doesn't have the capacity to do that because our Constitution prohibits it. So getting back to what Senator Harmon and Representative Mitchell put in as an amendment, it simply allows the ability to have lower rates for lower levels of income and higher rates for higher levels of income, an ability the state currently doesn't have, and an ability that the tax policy textbook says it should.
And again, for the viewers, they can't just pass the law in the legislature. They first have to pass a constitutional amendment in the legislature. Then that would be on the ballot in November, and the voters would have to approve the amendment or turn it down. If it was turned down, then the progressive tax would not be there. If they approve it, then it could be. Right?
That is correct. And so that's the way this process works for this segment of the Constitution. And, you know, for most elements of the Constitution, it has to start in the General Assembly. We are not a petition state like California is, where you can get voter-based petitions to modify the Constitution. There's only one section of our Constitution where you could do that, and that's the legislative article. All other articles in the Constitution really have to start in the General Assembly. So it needs a 3/5 vote in both the House and the Senate, and then ratified by either 3/5 of the people voting on the amendment or a majority of the people that vote in the general election.
And in fact, there may be, we have to see, there may be a constitutional amendment on the ballot come November for term limits, which can be done. It's the one.
Because that's the legislative article, right? So that can be started by voters.
And those signatures. So just, I can understand where people might be confused about that. Let me go back to what we were talking about. So the flat tax, the current tax, which is a flat 5% across the board. Let's talk in terms of millionaires, because they're the ones that would be impacted by this from a negative standpoint, to the extent that they have to pay more.
Right. Yeah, they pay
but let me ask this. So have you run the numbers relative to if you are of such an income that you would be impacted by that? What would the practical difference be since they're paying 5% from the bottom, whereas on a progressive they would actually have a lower tax base on the initial dollars, but a higher.
So the effective change isn't one that scares you, and so based on, and there's a number of different ways to run these numbers, and so there's going to be a plus or minus.
Have you modeled this? I guess you sat there and done computer modeling.
We have modeled it out, and so and we hate talking about this kind of stuff because everyone's tax situation is so different, and people have different deductions and credits. But on average, and in whole, right now the effective tax burden for millionaires in Illinois, say, is about of income, and under a graduated fair tax proposal like the one Senator Harmon and Representative Mitchell put in, it would go up, but only to roughly 6.7 to 7.1% of income. So it still wouldn't be in any way a very meaningful tax, especially when you put it in context of income growth over time, right? Where incomes at the top are very much growing at incredible rates over time. This is literally a tax increase that would be barely felt. And I have to point out one more thing. They wouldn't even feel that full effective tax because what you pay in your state income taxes is deductible from your federal. So their increased tax burden here in Illinois would decrease their federal tax burden some. So net, the actual impact on very wealthy families will not be a substantial one, or one that will matter. And
but then people are going to say, well, then why go through all this effort?
Well, because it raises significant revenue, and it raises it in a fair way. So,
I just want to make this clear because people can easily get lost in the trees here. So you would be saying, while an individual who is making substantial income, we say millionaire. Now, sometimes the millionaire tax kicks in at $200,000. At what point does this millionaire's tax actually kick in? At what economic level? Do you know?
Where's the highest rate under the Harmon? It's 200 something. $200,000 is that highest rate.
Is that single or
that's married filing jointly? I mean, what you need.
So if you had two people making $100,000,
not making. Remember, it's your net taxable income, and so people misunderstand this all the time. 95% of the tax filers in Illinois, so this includes married filing jointly and all that other stuff, have taxable incomes of less than 150,000, 150 and less. So you're talking about it could only possibly impact less than 5% of the tax filers, including those who are married and filing jointly. The increase itself impacts an incredibly small number of households in Illinois, and those households are doing very well and seeing their incomes grow at a substantial rate over time. Meanwhile, low and middle income families who are struggling to get by, who literally are seeing their incomes decline after inflation, their purchasing power decline from year to year, would get tax relief. And under Senator Harmon and Representative Mitchell's proposal, we'd raise the exact same amount of revenue that we currently are under the flat tax, but we'd raise it in a much fairer way where low and middle income families would pay significantly less and the folks at the top would pay more.
One last question on that. Have you run the numbers about how much more income would come to the state?
Well, no, this is the Senator Harmon and Mitchell's proposal is neutral from our current revenue. So it raises the same amount of revenue we currently get under the 5% level flat tax.
Huh.
So there is no net revenue increase. I think if people, and I know a lot of the anti-tax advocates are saying that this is some hidden tax increase. I mean, it really isn't, and it's not even a tax increase overall. It should be, people should very much understand that what Senator Harmon and Representative Mitchell have put in raises the exact same amount of revenue from the state income tax as our current flat tax does. It just does it in a much fairer fashion.
Although they were making the argument that we need to not go through draconian cuts and have more revenue.
Well, but they were making that argument only because our current flat tax is scheduled to phase down. And I think what Senator Harmon in particular was making the case about was, well, the options put on the table by the governor during his budget address were two. Let's keep this flat tax and save that revenue, or let's have draconian cuts. What Senator Harmon says is there's a third way, and that third way is let's raise the same amount of revenue we did with the flat tax, but instead of having this unfair flat tax that's really tough on lower and middle income families, let's go to fairer tax policy as suggested by the tax policy textbooks and raise the revenue in a fairer way.
One last question, we'll let you go. One of the changes that you have long advocated was, I think you would say, back in the 1950s, we were a manufacturing economy. We made widgets. Today, so many people, they sell insurance, they make websites. We're a service economy, but we don't tax ourselves like a service economy. So there's a lot of economic activity that isn't taxed, and it's unfair, I think you would argue, to the widget makers, the manufacturers, because they have to carry the load where the service economy isn't. That's separate from what we've been talking about, but while we're considering, tell us your thoughts just on that inclusion. Have you ever gained any support within the legislature for doing that?
Yeah, interestingly enough, there is some support in the legislature for modernizing our sales tax base to include services, but you'd only want it to include consumer services. You wouldn't want to go to business services like a gross receipts tax, such as Governor Blagojevich proposed a few years back. And I don't know if you recall this or your audience recalls this, but my organization testified against the gross receipts tax. It's a terrible way to tax. It's poor tax policy. You pick up any tax policy book, once again, it'll say it's poor tax policy. So what we do think, though, is your sales tax base has to include most of the transactions that are occurring in your consumer economy, and that's just not what we think. That's what's essential if your sales tax is going to bring in stable revenue to state. And unfortunately, our sales tax in Illinois is very much focused on the sale of goods. Well, currently, goods are only 17% of all economic activity, the sale of goods in the state of Illinois, whereas the sale of services are more than 73%. You just can't leave the largest and fastest growing segment of your economy entirely out of your tax base and expect to be able to have a revenue system that'll work. And it's one of the two reasons why our current tax policy doesn't work. Our sales tax base is too narrow, and our income tax is unfair and flat. So we need to fix both of those things.
All right, Representative. I'm sorry, you're not a representative, but Ralph Martire, thanks for joining us.
Thanks for having me on.
You're watching the Illinois Channel.